Okay, so welcome everybody. If you're new here, this is going to be the very first video in what I hope is going to be an extremely long course that will cover basically everything that there is to cover about swing trading. And this first series of videos, we're going to go over the very basics. This is basically the foundation that we can use to build on for everything else that we can learn in this specific series. So first off, we've got the different types of traders. The swing trader, which is who this first course content is going to be directed at. And as a swing trader, we're basically looking to make profits off of stocks that move up or down in as little as 1 day to as long as several weeks, and on some very rare occasions, a couple of months. We're trying to profit from swings in the market. That's where we get our name from. So basically you trade different types of stocks as a swing trader than you would as a day trader. Because as a day trader, you don't care what a stock's going to do longer than a few minutes or a few hours, and never do you hold any position overnight. Some stocks can fall in both day and swing trading territory. So some advantages that we as swing traders will have over day traders: it's less stressful for one. It does not require as much of your time. It can cost a lot less for you to get started because you don't have to worry about the pattern day trading rule, which is where you have to have $25,000 in your account to trade unlimited amounts. And you have more time to plan your trades. We get one single candle a day as opposed to the 60 candles that'll be drawn for a day trader on a 1 minute chart. A day trader has to analyze risk and rewards in seconds. We have as much time as we need. We can be very patient and look for very good setups. Day traders are generally more profitable in the first few hours past the opening bell. And swing trading, you can pick and analyze setups days in advance, and you can wait on those perfect high probability setups with good risk to reward ratios. As a swing trader, you still need to monitor your positions, but sitting in front of your computer for hours on end, unless you know that's what you're into, is not going to be necessary for this type of trading. This is actually really good for people who have jobs or, kids or other obligations. So up next we have the position traders. A position trader is more or less a long-term investor. The main strategy here is that time in the market beats timing the market. They focus more on dollar cost averaging and building very, very large position sizes, and they hold those positions for many years. Warren Buffett is this kind of investor. And the advantages that swing traders have over those types of traders is that you, of course, don't have to hold your positions for years to get a payday. This type of investing, it could possibly work for somebody who's already has a very large amount of capital. But like I said, if you're watching this video, I doubt that's the case. Swing traders can exit and enter trades much easier than position traders. This is due to the sheer size of the investments position traders usually, most of the time, have to take. So now we've covered the three different types of traders. Let's actually go over the participants in the market. There's going to be two types. You have retail traders and you have institutional traders. We generally fall into one of two of these categories. So retail traders, that's basically you and me. Regular people, we can either trade full-time, we can trade part-time. We're just individuals. We're likely trading from home or, our laptops, or we don't work for some type of investment firm. Retail traders, we're growing more and more, and with the internet making it easier than ever for us to learn and to find the information that was previously unavailable to traders, or very hard to find at least. Recent news like the Wall Street bets GameStop craze, I don't know if a lot of you are probably familiar with that. It's brought people out in droves with dollar signs in their eyes and get rich quick schemes on their minds. And just a note, if you want to get rich quick, this is not the job for you. Save some money, because the chances are you're going to lose it with that sort of gambling mentality. This is not gambling, this is a business, and we will need to treat it as a business. But as retail traders, we can match and even better the returns of money managers, especially if you consider the fees that these guys charge their clients for the small returns that they do actually get them. So the other type of trader is an institutional trader. These guys make up the largest size of the markets. These are the investment banks, the trading firms, the mutual funds, the hedge funds. Those guys all fall into this institutional category. These guys have a lot of money and they're very smart. And they have hundreds of staff working with them. They have hundreds of computer systems, and we don't have access to that. There are some things that we can do that we use to bridge this gap, which we'll talk about later in this series. But as a retail trader, we do have some advantages over these big guys. These guys have to trade big and they have to trade often because they're working with large amounts of capital. We don't. We get to wait for those amazing setups as long as we want with good risk to reward ratios. With the size of their positions, it takes them a significant amount of time to enter and exit positions. They more often than not have very strict rules on what and how they can trade. This gives us a lot of opportunities that they cannot themselves take advantage of. Patience. It's one of the largest advantages that we have over these big guy traders. Yet more often than not, we do not take advantage of it. We overtrade, we get in too soon, we get out too early, we get out too late. We let fear and greed dictate how we trade. When we swing trade, we're looking to get in and out in a short period of time and have a good risk to reward ratio when we do it. We do not need to outsmart these big institutional traders or beat them. Sometimes we can even jump in and ride on their coattails for a bit. As retail traders, we get to take profits sooner and cut losing trades faster. Imagine doing this with 1 million shares. It would take a significant amount of time, sometimes several days, to get in and out of position. Institutional traders can and they do move the markets. There's no reason at all why we can't be the guy riding on the bus that they're driving. That being said, you can never really tell what side they will end up taking, so it's equally important for us to do our own research and plan our own trades. That's going to just about wrap it up for this very first introductory video. To recap, today we learned about the different types of traders, the swing traders, the day traders, and the position traders or long-term investors. We learned about the two players. We learned that some of the advantages that swing traders, which is who this course is being written for, have over each of these types of traders, as well as some of the advantages that we have over institutional traders. In the next video, we're going to cover some more basics. Specifically, we're going to cover buying long and selling short. So, if you did enjoy yourself and you can't wait to see more, which I hope is the case, please remember to like, subscribe, and comment. Also, we have a very large growing Discord community that's just getting better and better every day. There'll be a link to that in the description if you want to join, and your support is greatly appreciated. And it is what allows us to continue doing this in the future. So, once again, thanks and bye.